Hi everyone, let's talk about Farmmi. It's a company together with its subsidiaries processes and sells agriculture products in China and the United States, also Japan, Canada, Europe, Korea, and Middle East. The trading is happening 68% below the site's estimated fair valuation, and they actually became profitable this year. Financial health, 6 out of the 6. On the risk side, earnings have declined by 30% over the past per year of the past 5 years. Highly volatile share price. We see in the movements, we see dipping in within the year. This went minus 75, and from its peak in mid-February, even 83% down. So it's pretty huge movement. Currently, it's went from the down peaks, I guess, yeah, 75% up since September last month. They actually printed a lot of shares out. Let's take a look. Yeah, so compared to last year, 3 million shares currently more out, and this is actually diluting the shareholders. Does not have meaningful market cap, which is currently 100 million, and actually they had a lot of news. They raised the capital, they had expansion, client updates, CFO change, and this is leading to the market performance. 7-day 70%, 1 year minus 59, and price volatility is the lowest, lower than the industry and also the average market volatility. But this is because they don't have the full 5-year relative volatility to the market. I guess they were 3 years now. The 16th of February they went to IPO, and since that they are 94% on the negative side. So this is pretty risky story, but I like how they calculating the fundamentals currently, because revenue 34 million, earnings 2.2 million, and yeah, so basically the market cap is calculated as much as three revenues. So pretty easy calculation scale here. P ratio 44 based on PE. I guess it's slightly overvaluated, but anyway, valuation side, fair valuation based on simple Wall Street should be around $1.13 per share. And unfortunately, Tip ranks and also the Market Watch does not have any price target currently. On the future growth for the food and beverage tobacco industry, 11%. Past performance, we see that historical annual earning growth decreased by 30%. The revenue is very impressive. It keeps just going up every year. Yeah, actually they had this kind of minus 0.0 the profit margin, earnings minus 307,000, but they managed to increase it. So basically they are currently once again pretty good. The profit margin is 6.5%, so not bad. They have high quality earnings. And on the financial health, 6 out of 6, that is meaning that debt to equity is 18%, considered as satisfactory. They have cash 17 million, which is well covering the debt, and yeah, the equity is raising. The level of the cash is good. Basically, it's pretty nice to see that the fundamentals are good in the companies that I research. Balance sheet looks mostly green. They're not paying dividends and no insider transactions. And by the way, ownership breakdown, so mostly this is held by general public, 89%, hedge funds less than 6, insiders 3.9, institutions 0.9. Top shareholders, we see 2 companies increased: Renaissance Technologies, Citadel Advisors, over 300%. This is reported in June. I'm sorry. This is actually the Jifang Chang, which is chairwoman and CEO, decreased 5%. This is reported 7th of June. Hudson River Trading decreased 36%. And yeah, as I said, the shares outstanding keep every year, almost every year, increasing. Total sales are increased as well. If we compare to previous 12 months, it's 14%, which is pretty nice. The technical analysis shows that this line, so it could reach $1 per share, but there's also double bottom, so maybe someone is increasing the shares within this tunnel, so between 0.20 or actually 25 till $1 per share, because the volumes were pretty high, but the share price is at the same point. And investing.com summary the stock for long-term investors as a strong sell. Thanks for watching this video. Subscribe to the channel, like